There's the closing bell on Wall Street, and now it's market domination overtime. I'm going to show you where the major averages ended the session here. The Dow falling by nearly 300 points, about 0.7%. The S&P 500 down 0.8%, and the Nasdaq Composite down 0.9%. A couple of things combining to send stocks lower today. First and foremost, investors really watching not just the events out of the Middle East as Israel and Iran continue to trade attacks on one another, but also on the rhetoric here from President Trump, who left the G7 meeting early and talked about unconditional surrender needing to come from Iran, as he has repeated what he has long said, that the country cannot have a nuclear weapon or nuclear capability. And so that all going on, investors watching oil prices go higher. And then the backdrop for that, economic data that Josh rightly described as tepid earlier. Retail sales in particular getting a lot of attention, falling 0.9%, including a drop in auto sales. So all of that combining for declines across the board here. I also wanted to look at sort of the leaderboard here of some of the leading groups that we watch. And all the way here in the right-hand corner in deep dark red, you see TAN. This is the Invesco Solar ETF, down 9% on the day. Large double-digit declines for many of the components of this ETF, as we saw in the Senate version of the tax bill, a phase out of solar credits in the next 4 years. So many of those stocks seeing steep declines. Bitcoin, remember yesterday, this was on the upper left-hand corner. So risk off today, expressing itself in selling of things like Bitcoin. Home builders down after disappointing read on home builder confidence. And then we continue to see some of the other more risk-on groups, ARC, which we have been watching go up in recent days, down today. And if you look at the sectors within the S&P 500, energy, yes, in the green, discretionary, healthcare falling, as there has been, again, the president talking about pharmaceutical tariffs coming very soon. They haven't come yet, but the group trading lower here. So seeing a lot of red on the screen here. And what's interesting that we noticed earlier today, that we talked about a little bit at the top of the show with Michael Cugino, is when you're looking for where are people going for safety, well, they're not going in gold today, at least. They have been going over the longer term, but down a little bit today. Silver, though, catching a little bit, up by 2%, Josh.
Thank you, Julie. Well, as the dust settles on another trading day, investors may be looking for clarity amid big tech's growing pains and stiff AI competition, which is heating up fast. We're joined now by Nancy Tengler, CEO and Chief Investment Officer at Laffer Tangler Investments, which has more than $460 million in assets under management. Nancy, it is always good to see you. I want to start, Nancy, actually, with geopolitical headlines. You know, Israel-Iran war, red hot, Nancy. You saw the president is on social media today. He was demanding Iran's surrender. You know, there's the risk when you ask this question, Nancy, that you can come off sounding kind of cold. But I'm just wondering if you think, as a longtime market watcher, does the market ultimately, Nancy, kind of look through all that? And as long as oil behaves itself here, and I'm looking at WTI still under 75, the market, do you think, Nancy, is ultimately going to just concentrate on the economy and the earnings? But what do you make of it?
I do, Josh. I was managing money during the period where Iraq invaded Kuwait, and you saw the market sell off. Then we kind of realized we were in a bit of a recession. As soon as we went in, at the U.S., that is, the market rallied, and it rallied hard. And it bothered people because it's war. But the fact is that your point is well taken and is correct, that investors are a little agnostic on these matters and are really more focused on the economy, on earnings growth, on the fundamentals. And we are in a pretty decent economy. Second quarter GDP from Atlanta Fed's about 3.8%. Now that's a bit of a snapback. So let's say we're growing about 1.8 to 2%. Earnings growth was pretty decent. Guidance was pretty good. The retail sales numbers, as Julie mentioned, Josh, were negative. But what was also going on last month was that the savings rate popped. So the very same reason that consumers were not spending caused them to save, and that provides a cushion, I think, as we move forward in the year. So if you really look back historically, consumers spend from their permanent income and they save the rest. The permanent income's still pretty good with average hourly earnings going up. So I think it's a pretty decent environment to be a stock investor.
Where does the Federal Reserve fit into all of this, Nancy? Of course, we are in the midst of a 2-day Fed meeting. We're going to get a new dot plot tomorrow, presumably no change to rates. But given that you think the economy is doing okay, are you in the camp then that the Fed maybe starts to cut over the summer, or do you think they're going to wait a little longer to make sure that we're not going to get tariff-induced inflation?
Well, Julie, I hope this doesn't seem unkind, but this Fed has been late at every turning point. And I think that began when they shifted their attention to backward-looking data. So if you're driving your car looking through the rearview mirror, you could end up in the danger zone. And I think that's what's happened. They let inflation get out of control. And then that preemptive 100 basis points cut this last fall is mind-boggling to me, and it was to the bond market because you saw the 10-year rally 100 basis points to offset the cuts. So I think what I would say is that they will probably be late. They may already be late in continuing to cut, and I think they will come around in the fall, not over the summer. Do I think they should cut in the summer? I think the neutral rate would argue that the Fed funds rate is too high. And it's creating other problems. Like if you just think about who benefits and who is hurt from the higher rates, it's the consumer that's hurt, it's small businesses that are hurt. Who's benefiting? Banks who are shopping at the Fed's window. They're getting pretty hefty payments. And then, of course, the government is paying significantly more on the debt, which is no one's fault but their own, but it is a fact.
You know, Nancy, one theme for you I know for some time has been you want to find those old economy companies, as you put it, that are now pivoting to those digital new technologies, so AI and robotics. What are some examples of that, Nancy?
Well, so Josh, I've talked about Walmart on your show. That's the poster child. They're embracing all of the above. It's not just AI and cloud computing, digitization, but also robotics. But you recently saw that LVMH has said they're utilizing AI across their business. So think marketing, product development, supply chain management. I'm giving a speech on regime change, and if you look at a recent study by Cotu, they went and looked at humans providing client support versus AI, and the difference is over $2 per event. And then if you go out in the study, consumers are much happier when they interact with AI. So we're seeing it in pharma, we're seeing it in industrials. I mentioned LVMH. The Mayo just embraced pretty rigorously AI in the radiology department, and there was a lot of hand-wringing that there would be fewer radiologists. They have actually increased the number of radiologists by 55%. So there is a lot going on that I think is very compelling. And we want to be at the forefront of that. We also want to own the providers of the picks and shovels and the infrastructure, which we do. But I think the shift is going to move nicely to a name like, for example, they report this week, but Accenture, that this may be the kitchen sink quarter, but we think long term, they're now a long cycle budgetary line item as opposed to a short cycle discretionary item. They are helping companies embrace AI, and the stock got hit. We went in and initiated a position. Pretty happy to be there.
And Nancy, when you talk about the picks and shovels part of this, there is perhaps no brand or company name more synonymous with generative AI than OpenAI, right? ChatGPT owner and sort of the thing that started all of this. There has reportedly been growing friction between OpenAI and Microsoft, despite their business partnership. How should investors be thinking about that situation and how it informs maybe how they're investing in Microsoft, maybe how they're investing elsewhere?
Yeah, I think Sam Altman has put himself in the position to be at war with a number of different individuals in Silicon Valley. Look, Microsoft paid $13 billion for 49% of future profits. Part of the deal was they would have an exclusive right to provide OpenAI's compute power and the right to all intellectual property. OpenAI is now objecting to all of that, and we'll see. I mean, they want to become a public benefit corporation. They need Microsoft to sign off on that, and in exchange, they want to give them 33% of the company. Satya Nadella is not a pushover. So I would expect to see the fight continue. I think the market kind of yawned today. Microsoft was down about 1/4%. So I think you stay tuned. If it does sell off, I think you continue to add to this name. We were adding before earnings. The stock's up about over 20% from that point, and we'll continue to hold it until we think this trade has exhausted, and we don't think that's for some time.
There were some skeptics, Nancy, who said, maybe 2025 represents kind of the peak, the high watermark of AI spend. As a longtime investor in that mega AI trade and trend, do you believe that, Nancy?
I don't, Josh. I think we're early innings. I mean, you heard Andy Jassy say we're kind of first batter in the first inning, and it might even be the first pitch. The hyperscalers did not cut back on spending after DeepSeek. I don't think it's because they didn't get it. I think it's because they understand they need to continue to spend to be leaders in this space. And so you're seeing a tremendous amount of CapEx. It will slow eventually, obviously, but I don't think we're there yet. And if you look at all the trend lines, you're seeing more and more companies adopt new technologies and they're mostly powered by AI. And just look at Oracle. I mean, it's the largest holding in our TGLR ETF, and they are talking about a backlog in demand that they can't even meet. And that's what all the hyperscalers said. They're supply constrained, so they need more chips from Broadcom and NVIDIA. And they need more infrastructure, they need more energy, and so we own a number of those names. And I think that continues for some time. May just be a few more years, but I wouldn't get off the bus yet.
Nancy, great to see you as always. Thank you so much.
Thanks for having me, guys.
Yahoo Finance continuing its coverage here at the Cannes Lions Festival, and you never know who you're going to run into on the ground here. Joining me now is AEW CEO Tony Khan. I should say All Elite Wrestling.
Yes, AEW, All Elite Wrestling.
Yes. So I've been following you for a while. I've been following the growth of this brand. For those not familiar, how big has AEW gotten since you launched a couple years ago?
Well, we have a huge audience. We've got a great partnership with Warner Brothers Discovery. We have Wednesday Night Dynamite on TBS every Wednesday night. We've got Saturday Night Collision on TNT every Saturday night. And this is the first year of the simulcast. So now the show every Wednesday night, it simulcast TBS and Max, every Saturday night TNT and Max. So the company keeps growing, expanding. We have a huge audience. AEW's on in over 150 countries worldwide. Millions of people watch the show every week. All over the planet. So AEW's grown so much, and the lifeblood of the company is our great wrestlers, our great fans, and that partnership with Warner Brothers Discovery.
I'm trying hard not to have like a wrestling trivia contest with you right now in real time. I'm not going to do it. But what made you, before we look forward, what made you start this? Because when you started AEW, there was WWE, WCW folded, and no other company was competing it. But something must have been going on in your head. Say, I need to take on a company like this.
Well, it was a great opportunity. We launched AEW in 2019. In 2018, I was looking at the pro wrestling landscape, and I realized there was a real opportunity to launch a challenger brand in this business. That's what's happened with AEW. We've grown the company so much. We started in 2019, and we're coming up just weeks from now. July 2nd, we're going to celebrate 300 episodes of Wednesday Night Dynamite. Recently, we had this huge milestone, episode 289. That doesn't sound like a round number, but the reason 289 is a big milestone is it signified AEW becoming the longest running primetime pro wrestling show ever on TBS and TNT. Wednesday Night Dynamite, we've done 300 episodes now. 288 was the previous record. So we've set the record there. TBS and TNT, they have such a great history of showing wrestling. So to be the company that's put on the longest running primetime weekly pro wrestling show ever on Turner Sports, that's pretty sweet. And, we're having a really, really great year. It feels like 2025 is, in a lot of ways, the best year we've had. We're having a great...
Well, how big is the biz? How many sales do you bring in? Is it making money? Like,
we're doing fantastic. This was a huge year for us. We grew the business so much with the simulcast.
Gotcha.
We brought in new audience with Max and streaming, but also we've been able to grow our cable audience year over year. Frankly, that cable and satellite and
growth in cable, who's doing that?
Well, honestly, us, because a lot of people thought when you start simulcasting AEW on Wednesday nights and Saturday nights, a lot of people they're still going to watch the show, but people are going to migrate to streaming. Well, actually, our cable audience, when we started simulcasting, went up, and we have a great audience on Max streaming every week too. So we have been able to do that, and we've really maintained and grown a great audience over the years. AEW, we say it's where the best wrestle, and I really believe that's true. I think we have the best roster of wrestlers in the world.
Key point, because I think you and I would both agree that talent is what makes wrestling. And I look back over the years, in the 80s it was really gigantic people yelling into a screen, cutting, 30-second snippets. But what makes a great talent nowadays in wrestling?
Well, it's a great question. I think it's a total package, different than the total
Lex
package.
Luger.
Yeah,
You didn't think, come on, you are going to get that one past me.
I knew you were going to say that, and it's okay. I love Lex, and I think that exactly, you got to have somebody that has all the skills right now, that total package. You want to have somebody that has the ability to talk and connect with the audience, somebody that has charisma, and somebody that's a great athlete. The fans want great pro wrestling matches in 2025, and they deserve great matches, and that's what AEW gives the fans every Wednesday night on TBS, every Saturday night on TNT. We've got a roster of wrestlers from Hangman Page to Jon Moxley, Will Ospreay, MJF, Mercedes Moné, Timeless Tony Storm, so many great wrestlers that can connect with the audience. They have charisma, but also they're great in the ring.
A lot of CEOs that I've talked to here at Ken so far, I'm getting mixed reads on the economy. What do you see through your ticket sales, your sales at the stands where I go get like a t-shirt and a hoodie?
We're having a great year. So for AEW, it's been really strong. I think you have to work really hard to earn the fans' trust or earn the fans' spending these days. You have to really put on a compelling product. At the movie theaters, the movies that draw are the big tentpole movies. It's changed a lot. Just to look at the movie business, for example. I was looking at the movies that came out around 20 years ago, around the holidays. I saw like 14 movies a month back in the 90s. Now people don't see 12, 14 movies a month around, the winter and the summer. Yeah. So it's changed a lot. You really have to earn the consumer confidence, and there are less and less players in the space. And that's why with media consolidation, it's really, really important, whether you're sports, entertainment, or pro wrestling, which is really great elements of both. But first and foremost, wrestling is a sport, and it has a great audience. And like great sports fans, wrestling fans come back because they want to see the best athletes. They want to see the best competition. And wrestling's a little different because there's great stories that drive pro sports, family stories, competition stories. And those same elements exist in pro wrestling, but we're able to really drive them, hit them home, take the best elements of movies and TV and build them in. And that's what's great about wrestling. But, I think when you're asked about the economy for AEW, 2025 has been a great year for us. But I'm not going to lie, like when we started in AEW in 2019, there were a lot of shows, there were a lot of channels, and frankly, media's consolidated and changed, and I'm really proud that after 6 years, AEW is still a huge part of the conversation and growing.
Well, Warner Brothers, look, you mentioned it, and Warner Brothers is splitting up. What does that mean for your deal, your rights deal with them?
That's a great question. I know that AEW, for both sides of where Warner Brothers is going, we have great relationships with everybody at the top, both on global networks and streaming and studios. Mr. Zasloff himself put our deal together. Gunnar, who will be running global networks, also was very involved in our deal as the CFO. The two of them and Bruce Campbell really negotiated this deal with AEW and myself and my team. So on both sides, we've got the great relationships, and both sides that really love AEW and have come to be great partners with AEW. So for us, it's been a big year, 2025, and now we're kind of on both sides of that equation. We are a big part of TBS and TNT, the crown jewels of the global network side, and then we're also a huge now part of streaming and studios with AEW streaming every week, so it's exciting.
Two last ones for you. I'd say rapid fire questions. First up, I need you to give wrestling fans what they want to know. There's been some chatter in the wrestling circles that WWE may be up for sale. TKO may want to take it out of the portfolio. Any interest?
I have not heard that.
Not heard that.
That's the first I've heard of that. I'm not sure about that.
Next up, would you ever, we've seen a host of promoters become part of the storyline in wrestling. I watch AEW. I've not watched every episode, full disclosure. Are you the type of promoter that is going to take a chair to the head? Do you want to take a honky-tonk type guitar to your head here?
I really don't want to get into the ring, and I like to think of myself as the commissioner as more of a device. You know, when you watch NFL football, we have a great commissioner. He's done so many great things for the league, and the way the NFL features Roger, I think, is fantastic. It's great to have the commissioner involved in the game. He makes the rulings from on high, but when you watch an NFL football game, it's not 47 minutes of Roger. And you don't need to see 47 minutes of me on Dynamite, nor do you ever really see me on the show. As the matchmaker and the promoter, I'm a device on the show. One time I was attacked, and I am very lucky to be sitting here with you right now, Brian. 1 year ago, I survived the deadliest move in pro wrestling, the spike pile driver.
Ooh.
The spike pile driver.
They're still doing that?
Yeah, it's banned in several states. It's illegal in the state of Tennessee. It's illegal in Mexico. And we'll be heading to Mexico this week. The first ever AEW show in Mexico is tomorrow. Okay. I'll be flying from here to Mexico City. I'm doing this with you and jumping on the plane and really, going from wire to wire. This is beautiful here, and Mexico City is going to be great. I don't want to necessarily get into the ring. My one time I got tricked and attacked in the ring is enough to keep me out for life.
All right, well, Tony Khan, always good to connect with you. All right, do stick around. Much more on Yahoo Finance.
All right, time now for What to Watch. Wednesday, June 18th, starting off on the Fed's FOMC meeting, wrapping up tomorrow, culminating with its interest rate decision for June. Wall Street largely expecting the Fed to hold rates steady in June. According to the CME Fed Watch tool, Fed Chair Jerome Powell giving a press conference after that decision, and Yahoo Finance will be starting coverage tomorrow at 2 p.m. Eastern.
Moving over to housing, we'll be getting some fresh data in the morning with housing starts and building permits. Economists anticipating housing starts will decline compared to last month to an annual pace of 1.3 million, while building permits tick up to 1.43 million.
And taking a look at the labor force weekly initial jobless claims data coming out in the morning. That number expected to fall to 245,000, signaling some more resiliency in the job market.
And we'll also get some earnings tomorrow, including Smith & Wesson and Aurora Cannabis. That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Ask for a Trend. I've got you covered for the next half hour with the latest and greatest market moving stories so you can get ahead of the themes affecting your money. Stay tuned.